Good morning, everyone. Well, here we are Wednesday, middle of the week, waiting for Janet and gang to tell us what they're talking about right now. I guess they're probably having lunch around the big conference table, enjoying that. Not a lot else going on. This was the feature of the week, actually, is waiting for the Fed. We traded up into that. We're a little flat, slightly negative. So we'll get a spike when the conference call and the release of the minutes come out, and everybody picks apart every word there is. So once again, same kind of schedule we've been doing. Just a reminder, there won't be a Process Warriors tomorrow. So we're going to try to stick to our schedule we've been going through and trying to track through index review and what's been going on in the markets overnight and those type of things. So I'm going to have Mitchell in the background here, so we're going to go ahead and bring him in. Good morning, Mitch.
Good morning.
So anything catch your eye overnight?
Just the continued stories about what's going to happen with Iraq and also the Fed meeting. But right now, none of that's material yet because it's all just the waiting game.
Yeah, and the Iraqi situation. Of course, the U.S. Patent Department is now in word censoring. I don't know if you saw that. The Redskins taking their copyrights away, which is interesting. So freedom of speech, I'm not sure what's going on there, folks. But it's getting scary. Government agencies meanwhile, some of the rappers are still throwing smut out everywhere, but that's not deplorable at all. So, yeah, anyway, so I'm sorry to go on a little rant there, but that stuff scared me when I saw it this morning. But I'm sure that's the talk at the coffee machine today, right?
I'm sure.
But anyway, I think from the market standpoint, we're just really flat. This is a hesitation. We have moved up a bit. We moved up from around about 10 points has always been the creepy crawler for the last couple of days, and not a lot there from that standpoint. But in the Iraqi situation, that's the big unknown, right? So we send in some guys to protect our embassy and get them out of there. I guess after Benghazi, they didn't want another blow up there, but that's probably all the military that we're going to see, and so therefore, maybe Iraq gets all carved up between Iran and all the Syria and all the sects there that are, and who knows what will happen with the Kurds in Turkey and all that. So the geopolitical thing is real. These guys have managed to get online thanks to our help with quite a bit of oil. So that's why we are going to spend some time talking about oil again. We talked about it the other day. We're continuing to see some upward pressure as that happens. Really hasn't flowed over to the market from the standpoint of affecting the market sentiment from the stock market. But there's definitely some flows going on there that we'll talk about. So let's go ahead and move over to the screens and start talking about some of these indexes here. And I'm really big on this screen, and so anyway, I guess that'll work for a minute. See if I have a better screen. Go offline here for a little second, just so while we're getting this going. But here's the S&P. Not a lot going on. This is the daily chart here, and we're seeing something interesting has popped up on the daily chart just this morning, just with this little action here. I put a cursor here. Let me move this over and bring up this graphic here. Just keep everything out of the way. But you'll notice that there's a couple little dots that are showing up. They're pretty small here on the screen. I just want to point them out, and we'll talk about what's going on. And these are these constantly emerging patterns, and I've heard people over the years say, "Gee, Bob, you were negative 2 days ago. How come you're positive?" Well, the market changed. It's not the same market. It's constantly, it's alive. It doesn't go, I guess I'm not Harry Dent and I'm still bearish 5 years ago, still waiting for the market to go down. We're actually looking at the markets going on, but these couple arrows we just put in there, what this is showing us is some new high targets on the daily was generated 2018, 2054, and 2076. And these are slightly different than the intermediate projections I've been talking about at 1973 and 2034, 2072. The top two here are pretty much in that range, 2076, 2072. They're coming in, so these patterns are all starting to accumulate and suggest that this market's going to go up. So I suspect today we're going to see a breakout of this pattern. I've talked about the 3-day range that's been going on. That is that has been also I guess waiting for a volatility explosion is really what I've been waiting for, and we haven't gotten that yet. We actually contracted down to around $7 the other day. So I've got a picture shot worked on. I was a little distracted, so I'm a lot smaller on this picture now than I was before. But the bottom line is these patterns are constantly emerging, and I think it's important as we go through this show to understand that these are dynamic. If you're in the I'm not in the business of making predictions. What I am in the business of following trends and talking about what the markets are telling us, what the expectations are, the probabilities. The markets are always about probabilities. There is nothing guaranteed. Wish there was a guarantee, but there's not. What we have is just some expectations, and then we have to continue to monitor the expectations to ensure that they're still telling us the same thing. And in our case that we've been talking about for the last several weeks, we're continuing to see the market move toward these lower objectives, and now here we have a new set of objectives. The key number on this pattern here, I'll bring that up, and I'm sure I'll be talking about it in commentary, is going to be 1925.80. If that number is taken out, that will negate this objective, and that will be the key pivot number in the pattern. And if you recall, just over in commentary the last couple of days, we've had I've been talking about a target zone of around 1925.80 with an extreme of 1921. So even if we break through that, it'll negate that pattern, but it won't necessarily negate the uptrend. So these patterns that are emerging, these matter of fact, let me go back to the whiteboard here, and I'll just show you how these things are being done, and we'll kind of do a combination here of our tech corner and understanding how all this stuff actually works together. But one of the things that you see here is you get these patterns, and in fact I should rather than drawing this, I should bring up the pattern finder. Matter of fact, I'm going to. But I'll show you this first. This low is what I was just talking about, the 1925.80. This is the low here. I'm talking about the penetration of that 50, I believe it's 55 and change. I'll pull up the number in a minute. When I'm in this mode, I can't pull up the actual numbers. But what this tells us is that we're probably going to get some sort of move and moving up into these objective ranges that are up here. And this pattern continues to evolve. It continues to evolve in a very big screen, pattern. So looks like I lost Mitch. So we'll see if he comes back.
Yeah, I'm back here.
Yeah, I have no video, but anyway, the bottom line is that what we're going to do is see this thing continuing to step up, and it just keeps evolving, and I guess that's okay. We own quite a bit of stuff, so that's a good thing for the markets to go up. I would love to see a big reset in the market where we get a decent decline, literally 20+%, and then see all these stocks and these indices get reset. We get out and protect, and then reset the whole game over and start another sequence. But that isn't in the cards right now. I've been talking about this for weeks now. Let's go over to the weekly chart, and take a look here at the weekly. We've been talking about this for some time as well. It's sort of becoming a little redundant, but because it's not really changing a lot as this week goes on. But I think there's a really good possibility here that we could see some changes. Certainly the sentiment possibilities are good, but we've got 0.66, 0.38, and 0.35, we'll call it, round up a little bit. All three of these moving averages are in trend mode, which suggests there's less than a 30% probability for the market to decline below those levels. And that level on the S&P right now, just to bring that up quickly, and let's see here, we got it's 1901.64 right now. That number is rising about 11 per week, so that'll be 1911. In 2 weeks' time, it's 1920, and we'll go from there. So let's move on to the monthly graph here really quick. Just to take a look at that, same old, but we are continuing to push into new highs. So look how many months, 1, 2, 3, 4, 5 months in a row we've been going up. Typically these patterns will unfold in these 5 to 8 month patterns, and so we could be getting closer to some sort of peak, but that peak might be up in that upper end of that range, that 2030 to 2080 range, 2073 I think it is. So we're continuing to see this, but these moving averages, I mean, just very robust trend. This thing is not anywhere near being over, and it's continuing on. That's the way it is. We look at economics and things that are coming out. We continue to see a general improvement in the underlying economy. Housing still kind of so-so. I'm not sure it's ever going to be what it once was. Housing ownership has changed, at least from the standpoint of what they are I guess, with the public and what the actual buyers of real estate are actually. It's changed a little sentiment change on how much they want to own real estate. Anymore, you're lucky to get your money back, and that's pretty much the game. I guess if you bought right a couple years ago, you probably feel excited about your real estate prices, as some of them have moved up in areas, and the lower end of the range has moved up. But the bottom line is there's just not the amount of acceleration in building and the expectation for that to carry the economy. So part of what's probably happens out of this crisis is we see some other industries start to lead the marketplace. And I'm not sure we've found that real guidance or that real leadership out there just yet. So there's not a lot going on there.
Yeah, Bob, as you mentioned, the housing starts yesterday came in below estimates, and I think ever since the crash, there has been sort of a shift when it comes to the thought process around housing, because it went from being what everybody's talked about was the greatest investment, or your largest investment for most people. It quickly became their largest liability.
Right.
And I think that shift has been in there, and it'll be interesting to see how long it takes for that to go back the other way, if it ever does.
Yeah, so did you lose your camera altogether?
I lost my camera, yep, so I'm just going to be a fly on the wall for right now.
Okay, well, I can bring your picture in.
All
I
right.
can see your old sweater that we were all complaining about. But anyway, these are, I guess, as we're going through dog days here, I mean, these are interesting times from the standpoint of what's really going on in the marketplace. This trend, like I said here, just looking at this monthly graph, this is a big monster trend, and it's not close to ending yet. It really isn't. I don't know how many more months. I had expectations earlier in the year that we would see the markets move up toward the 1905, maybe I think it was 1930. Well, we're now 1941, and we're not any closer from a technical high than we were before. So we're just continuing on this pattern. as it unfolds, and that's pretty important. So I had to get my glasses on to so I could see what's going on here. I always forget to put them on. So let's take a look at maybe some of these other things as we start to evolve here and move on from the indices over to maybe looking at a couple currencies here, and maybe I'll flash gold up is still in that same pattern we talked about the other day. That's on a 60-minute. That's why it's not liking what I did. Let's go over to a weekly gold. There we go. Let me also get rid of the trade system here. And just to look at the pattern, this is a really kind of funky pattern. I don't know what else to call it. It's one of these that, let's see if I can open this up just a little bit. It's one of these patterns that it's not really going anywhere, but they end up to be somewhat bullish. And as I've talked about, I don't know how many times now, but there's still an expectation for 1450, maybe even seeing this thing start to move up into much higher prices from that standpoint, maybe into the 15 to 17 range. If we look at a Fibonacci retracement on gold, I think there's some interesting things to look at there. Let me bring up a tool here and just see if we can just looking at this last sequence here. I believe that was the low there. Yeah, so this gets us into that 1500 range, 1504, 1574. The minimum's 1433. That's a 0.382 retracement, which is pretty much a minimum retracement. There's a 23.6 retracement, which would be considered a minimum, but we've already hit that from that standpoint. And I think we could see this thing at least retest that 1430, and then ultimately 1540, 1574 would be upper target up in this range here where my cursor is. That would be about what we would expect there anyway. See, I had issues the other day trying to get this thing to come off here. Let's see if it'll be nice to me today. I don't know why it doesn't do that. So anyway, as we go through and look at, there's really none of the other metals. I guess you could look at copper here as far as that goes. That has the same kind of pattern. So all this expectation of Chinese demand, and we talked about this on, I think, Process Warriors, some of the expectations that were built from the 2002 to the 2007 great commodity rise continues to be out there. People tend to remember what happened, good and bad, and it tends to affect the psychology. And that's why we were talking about how a lot of folks still have alternative commodity type strategies in their portfolios. And really that's a hindsight thing, because that's not what's happening on the planet right now. That big expansion has occurred and is over. That's what has happened, not what might happen. And as far as the big giant surge, I think that was over. And we brought up one of the indexes in BPM to show how that basic materials index had, actually it was a steel index that we looked at, really had exploded, and that was what everybody was still kind of hanging on to just in case parts of their portfolios, which is not really forward looking. One of the things that I usually try to do, and there's really nothing I can find out there, is looking forward to industries, rotations. I've been pretty good over the years of figuring that out. In 2010, I talked about the ability for efficiencies of the corporations that were out there that were going to drive the markets, and that did pretty much it. So you had to learn how to make money in a low GDP world, which is what's happened. So you make more with less, so fewer employees, more efficiencies, other things are going to drive prices, and that's still kind of that same game is still out there, but not to the extreme. I mean, there were companies that played into that, like some of the CRM companies and anybody that was doing different types of outsourcing software and other things that really drove a lot of that productivity gains that we saw in the markets. And productivity outweighs anything when it comes to economic expectations. When you can grow true productivity, that's where you're going to see a lot of bang for the buck. And that's why we have seen over the years the corporate profit ratios go literally through the roof. So let's go ahead and haven't looked at it for. I don't think we talked about this the other day. See if I can get to the point. Accidentally clicked on something. We have live hogs up there. We don't really care about live hogs, so we'll, guess this would be a good point in time to start to go over and start to talk about what's going on in crude oil.
Yeah.
So, Mitch, did you have some things that you saw out there that was critical on the Iraqi situation, or what?
Well, I mean, there's been a lot of conversation with the talking heads. People trying to fill the 24-hour news cycle, talking about where oil's going to go should Iraq fall to these terrorists. So I thought it'd be good to take a look and see if there's been any sort of reaction by the market to the events when it comes to oil, as well as maybe some of the big oil producers like Exxon or BP.
Okay. Yeah, so I've got the crude oil futures chart up here, and you can see this is the monthly graph, and we talked about this a bit the other day, but I think it's worth talking about again. Is if we go in here and put on just the Fibonacci retracement lines from this crazy peak that we had back in 08, you can see that the lines of expectations are for the minimum is 115, which we're not there yet. We're 107, but we're getting close. And then the more higher probabilities were for the market to go to around 129 and then 145. And the 200 level is pretty outrageous. These are adjusted for premiums, this chart that we're looking at. So I know the crude never got to 190, so you're probably wondering what this is, but it's a continuous futures graph that has slightly different pricing, but the ratios are all the same in the pattern. So, but you're still looking at futures moving up maybe to 130, 145, and you're going to have to break above some of these ranges. But this is the same pattern that we're seeing in gold, the same pattern we're seeing in treasuries, and just about everything that we've looked at. So just to give you an example here, I'm going to switch over to treasuries, which is going to show us a similar pattern. Let me just squeeze this down just a touch, and this will give us a little. You'll see this flattening pattern, and we're starting to see treasuries move up in that 264 range. But the thing I want to look at here is just the pattern. So if we go from treasuries, we go back and we look at, here's the crude oil. You get this big long elongated deal. We look at gold. It's setting up similar patterns from this basing pattern, and this is actually a pretty good look here at this gold chart. We had it up a minute ago, but you can see that this pattern's pretty much done. If you're going to own gold, those of you that want to own gold, this is probably a good place to own it down here and around below 1300. It's going to end up to probably be a pretty good idea from a longer term standpoint. And these graphs, once they start to turn here, if you see an uptrend, then you could, down the road, then you could see some of these things start to pop up. The old there's still the great debate that's out there that no one's really talking about. It's kind of faded into the background, but the great debate is inflation going to come back? What are all these things? What are the longer term aspects of this market? And from my viewpoint, there are a lot of things starting to show, like the crude charts, the interest rates, gold, a lot of things are looking that you're going to see. I think the higher yields are going to cause the yields are going to be triggered by inflationary expectations higher, so it will play into the same hand as some of these commodities. So the gold, the crude, all of those things starting to play into the markets there as far as that goes. So there seems to be a technical story building, and I've talked about this before in doing reverse fundamentals, which you look at. Here's what the charts are telling us. So what's going to trigger those events to happen in the real world? And it could be geopolitical risk. It could be some inflationary expectations start to flow into the market and so forth. Yeah, that was interesting. Sorry, I managed to protect you from the noise, but not from the visual action of a violent sneeze. Sorry about that. Been waiting for that to happen. I knew it would happen one day. So, I don't know how. Let's see here. All right, we're back. I managed to step on a cord of the mic, so I'm not sure what you heard. I don't think it was a real long outage. Anyway, not sure how that happened. That was a new one. But the soybeans, the corn, all of these things, I remember when the talk of the town was corn. We were even seeing advisors putting some of the corn, some of the commodity ETFs directly into their portfolios, trying to play into this game. This is the monthly graph. If we go in and look real quickly, not that we're into the commodity corner, although this is my roots. I started in 1979 trading in the corn pit. This is where I started in this world. But you can see the overall trend here, if I go full screen, has just been drifting lower for a while here. We went from around $7 and change. Let's see here, went yes, 733 all the way down to 430. So there's a pretty good decline there. And the whole ethanol and all that craze is probably pretty much over, especially since it causes more pollution than just burning oil does. So there's not a lot there. But my point is that what we're trying to develop here is what's happening with commodities, whether it's crude oil that I'm bringing up right now, or whether it's gold, some of these other items out there that are really part of the economic scenario that's going on. And of course, the whole expectation of being able to move toward the higher yields and all that. So maybe, just maybe, I've been a big deflationist for a while. Maybe they finally pushed on this rope long enough that it's going to start to show some expectations. I know some of the numbers we came out with the other day we're starting to show a little bit of inflation. And I noticed that I think it was India came out with a number the other day that was starting to see an increase in their inflation index as well. So maybe there's some movement across the planet. Meanwhile, the Europeans are still freaked out about deflation and trying to get inflation. So sometimes you have to be careful what you wish for, I guess. Anything else that you see out there on the crude or that story, Mitch, that we can?
Well, let's take a look at BP if we could. I guess that might segue into the stock of the day. And start talking about some of these producers.
Okay.
And we're currently optimized at the 3.2 system, and we're long that stock currently.
Yeah, I'm trying to figure out why this thing is not working here. Let's try it again. I don't want to do this the old-fashioned way. There we go. So here we are. BP's been probably recovering now because of the just coming out of the Gulf thing. They're finally paid the billions and billions of dollars in fines, and they can make money again. They've got moved beyond that. So this may have some other things going on with the symbol. The other thing that's happening is the British pound, which we haven't brought up. British pound is really moving sharply higher, and that's been a big play from a standpoint of what's going on in the world. Let's take a quick look. Yeah, you can see here's the British pound almost looks like BP. It looks very, very similar in how it's been moving up. And the pound is at a multi-year. Let's see if I can get over to a monthly graph here, just to get the long-term view. It's moved up, way the highest levels it's been since the crisis. Anyway, from the recovery crisis mode, we're at 168, and we're getting pretty close. 169. We're actually above that briefly the other day. Let's see here. 169.68 was the high. So yeah. So these type of things are sometimes currency related as well. But we're back to BP, the stock here on a monthly basis, so you can see that same recovery from that standpoint. But they look very similar. So there's some influence of currency there as well. Let's go with a domestic oil like Exxon.
All right.
Just to see what we're seeing there. And
we're optimized to the 1.2 on Exxon.
Okay, we'll go ahead and bring that up then.
And I believe we're currently flat on that.
Yeah, we are. So, this momentum's just starting to emerge here. And by the way, I don't think this has ever had this symbol has ever had a really good ER ratio. I don't think it's ever traded Exxon very well. I don't think that's one of our stellar stocks. And part of the reason, and we started touching a little bit on the Process Warriors yesterday, about Process Warriors was focused more on models and how they're responding and doing different types of elements, and going through research yesterday. And we're going to continue to develop those ideas. But this is a pretty choppy stock for the most part that really hasn't yielded much. Can you see the ER on that, Mitch?
Yeah, it's 94 right now.
Yeah. So it's always been a substandard deal. How about Chevron? What is that? SHV? Is that right?
I thought it was CVX.
CVX. Yeah.
Let me see here. CVX it is. And let me tell you what the optimization is on that.
We're long 1.2 right now. So this type of mess here in the middle, from a modeling standpoint, you're going to see this buy, sell. There was nothing going there. It looked like it's going to break out and go up, and it fails. Looks like it's going to break out and go out, it fails. Had 3 of those, and finally it did fail, and then we came back in and bought it. This final trade, this is the 3 times in your right mode. And but my guess is, and I don't know, the screens that I've seen, I don't think a lot of these energy companies are showing up on these screens. So if you're screening, you're probably, even when you see a stock like this that's had a rough period, the chances are on a screening basis, the balance sheets weren't putting anything out that were anything exciting. But you can't see. Are we 1-2 on this, Mitch?
We're actually 3-2, but
Okay.
they're both in that fair to poor category.
Right. Yeah, the energy stocks have never been good traders for one reason or not another. It's funny because they actually tend to do better when oil's going down. I don't know if their margins improve. What happens? I have no idea. You'd think it'd be a little different, but if you look at some of the correlations over the years, you'll see that. What else we got?
Next up on the list, let's talk about FedEx. I believe they came out with earnings today.
Is that FDX?
FDX. And we're currently long on the 1.2 system on this. Or excuse me, we're optimizing the 1.2. We're flat the security.
Yeah, because I was going to say this. I should be on that right now. Yes, we're on 1.2. So yeah, we're showing flat. Earnings were good. Obviously, we're up 5%. This pattern is one of those. We're finally seeing some of the pattern breakout, where we're seeing. Bring up the whiteboard real quick. And you can see the change in the PPMs have actually pretty robust here, 115, 114, 175. And so this stock this is the type of breakout that you could see a new signal come up. There's no objectives right now from a Fibonacci standpoint. But certainly if we can hang on to these gains into Friday, you could see this thing come in. You're looking at all the PPMs are breaking out, just beginning the breakout. And what you want to get to, let's say if we look at this pattern over here, we're not quite there. We're probably more like it was over here, where all three averages were really close together. That's what we've got, a consolidation here of the averages. And then you get the breakout, and then ultimately what happens is you want the averages to spread out and get a trend. Now I don't know if that can happen. Maybe this is going to happen. I don't know. There are no expectations built, and we get a signal. Then we can use the VPM stats as a target zone from that. What the expectations on the trade profile are. That will help us to determine what the expectations for FedEx is. Last trade was a pretty good one. Followed that trend pretty well. This one was kind of flat. There hasn't been a lot of big trades. This goes back for a while. Let me squeeze this down just a little bit. Yeah, there haven't been any real big trends here until this last one that we captured pretty well. So, VPM's always trying to capture that middle 60-80% of the trends, and you got to have a trend to actually capture. So there hasn't been anything that's been real robust from that standpoint.
Yeah, the 3.2 system is still long on this one, but it's certainly been pretty volatile ride as we've been long it. So on the 3.2, we're up, I think, let me check here, 47, we'll say 47.5%. So we've done fairly well on this one, but still it's still optimized in the 1.2.
Okay. Yeah. All right. Moving on.
All right, let's pull up Walgreens, WAG. That's also on the 1.2 system.
Okay. All right. So we're long this and get a nice trend. We got 156, 127, and 86 from the standpoint on the PPM. So we got a really positive gain going here. And Mitch, what's the current P&L? Can you see that real quick for me?
Yeah, give me 1 second.
But yeah, the trends are expanding. You can see all three of the PPMs are starting to break back up again and starting to show an acceleration. And the three moving averages are spread out, which tells us there's a pretty robust trend. And then the pure numbers out of the PPMs are confirming all that to be the case. So we saw a nice move here, got out, and then we got back in when the trend reemerged. And now it's capturing that. So we have one little piece here. It's kind of a flat coming off the lows back in 2012, but some pretty good trades overall on that. I think one of the big trading stocks has been like CVS, I think, right? Is that their symbol?
Yeah.
I mean,
Yeah, we're up 27% on Walgreens currently. And let me pull up CVS.
Yeah, I've got it here. I got it on one too, but similar kind of pattern, really. Oh, I know what it is because it's Rite Aid, and I think it's RAD. I think. Is that right? Yeah. Look at this stock. This is a big winner. I've got this in one of my portfolios, and it's been lots of fun. We bought this stock at 124, and it's finally come off in the last few days, but it's still at 728. So it's a monster 600, almost 700% gain on this particular stock. But same industry group, same I guess competitor. Not sure what happened to this company. I didn't really worry about the fundamentals as much as they were. They did come up on a value screen that I use, and way back when. So that's been a huge trade. So as you go through all of those, you get CVS going back and reviewing is a very similar pattern to Walgreens. There's WAG, you'll see it there. And we go over to WAG, you'll see it's almost identical chart. It looks like Walgreens is really the leader out of that group from the standpoint of probably valuations. They're become the big player, but that Rite Aid has just been a moonshot. It's been a lot of fun to be involved with, to say the least. All right, next.
All right, how about Adobe, ADBE? This is also on the 1.2 system.
Okay, so we got out. We had big trade, took profits, and now it's moving up again, up 747 today at 72. These indicators that are down here, the PPMs, those adjust real time, so they're responding to today's activity as far as this move up. They're calculated in real time. Sometimes if you're watching the screen over on the left, you'll see these PPMs actually change in value as the market's trading. This is a real-time graph, but the realities is that this trend has been around. I've talked about this, I don't know, quite a few times, but I'll bring it up again. VPM doesn't like this last little rally because I told it not to, and because this usually these kind of rallies and the new highs, they end up failing. There's not another one of these trends up. So I was quite pleased to be able to capture, bringing up the whiteboard here, to capture this trend like this and not worry about that, trying to get every penny out of a stock. I think that's, an old buddy might say, date your trades, marry your strategy. And if you do that, this was we had a nice long dating period, and it worked really well here as I've drawn some arrows. That was a good trade. Do I have to have anxiety because I got out? And no, I don't even care about this stock anymore because it doesn't matter. And typically these type of patterns could emerge as a new trend, but doesn't look like it's likely. We've already doubled plus in price already, and it's probably ultimately these stocks will just fail and maybe go into some sideways pattern, or they'll reset and come way down and retrace most of that rally. We've seen that happen in a lot of stocks actually, but Netflix always comes to mind. It goes from 60 to 270 to 60 to 400 or whatever it is now. So what do you got next here, Mitch?
All right, how about Deckers? That used to be a pretty good trade, DECK.
Yeah, and this might actually kind of play into the scenario I was just talking about, is where you see you get the initial trend up, and from here, so you see this trade come in. So you'll see this trade come. Market goes flat, it breaks out again, we buy it on this bar right here, and then we get an exit out, and now we're in this sideways mode, and these PPMs are somewhat positive now, but it's in one of those modes where this stock is probably just going through one of these sideways ranges right here, and there's some more consolidation maybe a little downside before it's capable of going up. And we've also, this was back in the heyday, up here. I can get to the price in a minute, but it looks like it's around in the mid 120s or 118 or so. And then we get this. This is what I was talking about, some of these stocks, these big resets. So if you look at here, the stock came from this base. We went back to that base again before the market started to go up. So that's why love affairs with stocks don't work very good, because you've got these big moves to deal with.
Let's pull that up on the 3.2 system as well, because this is the 1.2 right now, correct?
It is, I believe. Yeah.
Okay. Yeah, we're certainly we're long this position still on the 3.2. This has been a fun one. Years ago, I had this in a portfolio that I was running, and it's had some pretty fun trades, to say the least.
Yeah, so you got to have a cluster of trades over here on the left, the in out, one of those crazy deals. I would be shocked that if you were screening for this stock that it showed up in this area. And that's one of the things, and why we always emphasize doing screens and doing everything. And Mitch, have we got our screens together?
Yep, I'll check with Mason, our web guy, to make sure they're posted. But I did send them off to a few advisors that were requesting them yesterday. So if they're not up right now, they will be up shortly after this broadcast.
It's not as fun putting him on the spot when I can't see him. It's a lot more fun doing that. But this, so you can see 3.2. Here's actually a couple really good things to talk about here from the standpoint of what VPM was doing. We're in some crazy configuration here that caused these 1, 2, 3 trades. It looks like that didn't make very much money, but it didn't look like they lost much. Can you bring P&L up on VPM for me, Mitch?
Yeah, we're currently up 81% on Deckers.
Yeah, so how about these previous trades here? Can you bring up that trade log, the previous 3 trades, and just tell me what the nets were on those?
So the last 3 trades, each were losses. Last one was down 7%, then down 4%, and then down 5% on the sell that we got out of in March 2011. Prior to that, we had a gain of 217% in January of 2011 that we locked in. Prior to that, we had a sell in 2008, right before the crash, of 323%. And then just a beautiful trade that ended out in 2005, a gain of 600%. So, I mean, there's 3 triple-digit profits there on this trade. So it's been a fun stock to own.
I've kind of brought this up while you were talking there. You can see these trades that Mitch was talking about. I've got it back to 06 here now, but you can see this is a big trade up here. We got these 3 trades. By the way, if you remember on the trade impact chart, so you lost 7% on this stock. It was 7% of probably somewhere between 4 and maximum, typically around 6% of what you had in there. So you lost 5% of 6% or 5% of 4%. Which is not very much. It's very immaterial. Probably the only thing that bothered you guys was that you got charged a ticket. That would seem to be more irritating than anything. So, but the bottom line is what we're looking at here is when this trade range happened here, you're looking at this little configuration here, and this is what I wanted to show you. I lost my cursor in my whiteboard, so I'll bring it back. But this is one of those trades that I was talking about that typically BPM is not going to like, where we get this little move up here. It does nothing, even though the market went to a new high, or this stock went to a new high, and then it collapses, and it also collapses back to the base where it started. These stocks do this so often, it's amazing, especially these high momentum stocks like this. And now, then here's your last mark, where you're trying to get back to this high, and so now you get this, you get another elongated trade. There are some Fibonacci expectations up to around 100 on this stock, so there's another $20 here at least. Let's bring up that real quick. So this is a fun stock. I know that over the years it's been on the list, and it shows up. it's interesting when it gets down to these lower levels. It shows up on some of these GARP and value screens, is where this stock showed up often on the old GARP screen that I had out back in 2008. This is what one of the stocks. Look, it came out mid 2009. My bet is that this trade came in probably in July. Bought. See, where's the date on this thing? Yeah, no, August 21st of '09 is where this trade came in, and that was what'd you say, Mitch? 300% or 200 some percent?
Yeah, bear with me 1 second. Just pulling up an R stock.
Yeah, no problem. But anyway, so you get these three trades that don't have any material effect. They cost a ticket and they cost very little to the account. Maybe I guess one of the hard things for everybody to understand is, gee, we got out and we got back in, and then we got out, we got back in. You know, why is it doing that? And you can see that these patterns were breaking and failing, breaking and failing. And finally, these PPMs just got into signaling a top formation where you start to see momentum just start to fail, and you see all three of those, and then you get the huge decline in the reset of the stock, which gave it another opportunity yet for another 200% gainer. So if you look at this thing over since 2009, if you look at the trade impact on that, all of a sudden it's pretty huge, because we're looking at you got 5% in, and now I think, Mitch, one of those trades were like 300.
Yeah, the trade that we got out of in 2008 was a gain of 324%.
Yeah,
followed by another 200% trade in 2011.
So now all of a sudden that 5% trade had a 15% impact on returns and so forth. So you got to take the good with the bad, and that's why that trade impact chart is pretty significant. If we had that in a portfolio we're tracking on that, it'd be nice, because you could click on that symbol and you could actually see all the impact of each one of these trades, and there'd be several that were very significant and others that had little or no effect on the actual portfolio as a whole. And that's kind of bringing that perspective into what's going on there. So let's
another note on that. This is another great example of when you see three losing trades in a row, where you'll see some nice gains follow thereafter.
Yeah, we talked about that on one of the shows. I don't know if it was a Process Warriors or a Market Thunder, but probably a while back. But I keep, we used to always say sometimes you got to do same trade 3 times to get it right. Well, in this case, you did it 3 times, you didn't get it right, but then ultimately about a year and change later, the stock came back in, and I know this stock was on several screens, and like I said, and they were mostly related to GARP and certain types of value plays. They would not have probably shown up as a growth play, but probably if you screen them now, they look like growth. So the whole concept is, I've always liked the value side of playing the value, but it gets more difficult when the market's at historical highs to find a lot of good value. But when the markets get reset, value is always your best play. So in 2008, when I was doing the training videos, that's why I featured the GARP and any type of value, because when you get a market that gets crushed like that, you got book value, you got all kinds of ratios that are very, very positive to these companies' balance sheets, which ultimately represents a really, really good opportunity. And I fear if we play the value side after the crash, we'd come out of that really well, and that was the case. So what happened then is, then after 2010, advisors that were using that same value approach weren't getting very much out of their accounts, but the style box was out of favor until we got reset back in 2011 and 12, and then those style boxes came back into play again. So any time that you just paint yourself into a corner in a style box, you're going to have times of leading and lagging performance. And I know we used to have a video of presentation I did in, I think, a 2010 national conference, that we talked about the leading and lagging performance windows. And if you're in a style box, even if you're a blended style box and you're even value, you could be value growth blend, you're always going to have some of those windows. And that's why your favorite mutual fund is a 5-star this year and a 2-star next year, because they're stuck in that style box, and these style boxes and asset classes will fade in and out of favor during different business cycles. And so that's what you're seeing here. So let's see here. We're down to 4 minutes, Mitch. What do we got for the grand finale here?
Let's talk about some trains. How about UNP, Union Pacific?
Is this the right model we got here? 3-2 or?
We are currently optimizing the 3-2, and we're long that.
Okay, yeah, see that. So here's, when I look at these charts, folks, I like I said before, one of the things that comes out of this Market Thunder broadcast that we're doing is really looking at how VPM handles this particular symbol. And if we go back, I guess we go back to the 09 period, and actually just before that, you're going to see that we exited long right over here, right before the decline started. But then in the 09, my bet is it's around the 720 into that early August, we get this big trade here. We're out of it, we buy it, we get another positive trade, then we get another positive trade. And even though this little gap here I'm pointing out we missed, now we're in another, working another positive trade. So in all of this, there's a few gaps missed, but with the goal of 80%, you pretty much captured this particular scenario without any potential downside risk. And that's really what VPM's trying to do. When I see this is very exciting to see how we were able to address these trends. And somebody might go, gee, we missed, why'd we get out and get back in, or all those things. That's because it's about probabilities. Like I talked about earlier, there's no way to guarantee anything, and you always have to respond when you see elements that you understand can start to fail. And that's what these models are doing. They're looking at different trending elements, and when they start to fail, I guess here's a great line: when they fail, they bail. I don't know how funny that was. Maybe a little corny, guys, but anyway. But that's really what I think we're looking at from when we see these type of trends go on. And even looking way back, I guess I could squeeze this down. There's probably some trades that looks like to me that same pattern continued even way over here in 05. So some of these stocks are able to continue to do that. So we're down to 1 minute, and I'm gonna show. I want to show everybody a picture of Mitch with his favorite sweater on here. So there's a sweater that everybody was busting his chop. Thank God it's got up to at least 80 degrees in Minnesota, so he can get rid of the sweater. But anyway, go ahead.
Been sweating it out pretty good in my office lately. Got another machine in here, and so it's turning from an ice box to a sweat box. So.
Yeah, we got a power machine to help crunch numbers, so we can bring lots more transparency to our process. Anyway, folks, this will end today's show. There will not be a Process Warriors tomorrow, but we will be back on Friday morning with another Market Thunder to finish off the week. And one of the things that we did not look at this entire show somehow, I usually look at the futures, and we just had, we're close to having a little market top to come in, but we'll see. It looks to me that these patterns are going to want to move up. I usually try to get some expectation into the close. It looks to me that everything we've spiked out, put a low here on this hourly graph. We should see prices move in as Janet comes up on the podium later today. Anyway, have a great day, folks. We'll talk to you on Friday morning.